Good afternoon, everybody. I'm Matt Kinsman, Head of Content at Connective. Welcome to One Subscriber or 48,000 page views, understanding editorial economics and turning content producers into revenue generators, brought to you by both Connective and SIPA. Today, we're going to really be talking about unit economics of content, what that is, how you identify it, and how information companies can really use that to drive a content strategy that can be monetized. We're excited to welcome our speaker, Matt Skibinski. Matt is the Reader Revenue Advisor at the Lenfest Institute for Journalism, which was founded in 2016 to help local news and other content outlets crack the code on the sustainable journalism model. Matt is also one of the founders and general managers of NewsGuard, an initiative that fights misinformation and disinformation by rating news websites on credibility and transparency. He previously served on the board of directors at the Future Project and also as the Vice President of Client Services at Piano, a digital subscription platform for news publishers. We've actually been interested in having Matt speak at a while. I think we initially connected last fall when we saw a terrific article that he wrote on editorial economics, and interested in having him speak at our BIMS conference, also this spring at the Connective Executive Summit. And for a variety of reasons, we're thrilled to have him here today. So with that, Matt, please take it away.
Great. Thank you for that introduction, and looking forward to talking to you all about this. I'm going to start just by giving a bit of background on, that was a great introduction, Matt, and this is just a bit of background on Lenfest and where is all of the data and best practices that I'm going to talk about in the rest of the presentation. Where's that coming from? So at Lenfest, we've done some research on reader revenue specifically. That's been my main role at Lenfest, is both collecting data about reader revenue models, turning that into benchmarks and best practices, and advising publishers, groups of publishers, different initiatives, I'll talk about that in a second, on how to take quality journalism and turn that into a sustainable revenue model using digital subscriptions and memberships. So we have data from a wide range of different kinds of publications, but one thing to note for this group in particular is that the vast majority of the data we have and the best practices we have come from the newspaper industry. To some extent, some more niche publications, magazines, and the like, but so keep that in mind when listening to these benchmarks. A lot of this really is from newspapers. There are some differences if you're a B2B publication, if you're controlled circulation and people aren't used to paying for a print version of your product, for example, in the past, if you're digital only. Obviously, there are some differences between newspapers and others, but a lot of these insights and best practices do apply across different genres of publications, so there's still quite a bit of insight to be gained from looking at them. At Lenfest, a couple of things we've done with this data. We published a white paper with the Shorenstein Center at Harvard. You can find that on the Lenfest website. We helped create, and I was one of the original coaches of the Facebook Subscription Accelerator program, which started as 14 newsrooms in the US and now is like hundreds of them all around the world. So that's been a really successful program. I've also been involved in the Table Stakes Initiative and a handful of others that are all about helping publishers learn how to generate revenue from digital subscriptions, reader revenue, all sorts of different models. So with that context in mind, a big trend that we've seen, I've been involved with digital subscriptions for news and reader revenue models for news since almost over a decade ago at this point. And we've really seen a huge shift in the conversation about it from, there being a big fear a few years ago that adding any kind of paywall or reader revenue model or metered model would basically kind of kill a publisher's digital advertising business and prevent them from gaining audience over time and continuing to compete, to now where we've really seen a shift in that, and there's a wide acceptance of people paying for, consumers paying for news content online or on their phones, and some really successful cases. Of course, there are also many, many cases of publishers that have not yet started charging for digital access, or who have done so but haven't yet achieved success. And so that's sort of the context we're having this in. The other piece of context is that, of course, ad revenue, both in print and digitally, if you take them combined at least, is down. You know, you can't have a presentation at to a group like this without having at least one depressing chart about ad revenue. So here it is. You know, so publishers are naturally looking at different models for how they can monetize their digital content. And one thing that seems really clear to anyone who's looked into the data, and really at this point, I think it might even be widely accepted, is that programmatic advertising revenue alone, and even digital advertising revenue, has not yet, in almost every case, been enough to support a thriving newsroom. So that's where the concept of different reader revenue models and other revenue streams has come in. But what that has led to, the advertising only model digitally was for many years the main and only model that publishers were using to monetize digital content, has led to a scenario where, if you're a publisher, it often is more profitable to produce content that's not very high quality, but that is sensational. In this case, it's looking at the data, the amount of traction that 16 hilarious times people wore red to Target, meaning they looked like the Target employees, versus a really deep investigative report done by the Philly Inquirer about literal toxic sewage in the rainwater, in the city's water. And if you're looking from a pure page view perspective or even social engagement perspective, the silly article about pictures of people wearing red at Target gets vastly more page views and more interactions online. And so the question, as a result of all of that context, that many journalists and publishers are asking is, what does successful content look like in a digital world? Is it getting a lot of page views? Is it something else? There's been a lot of confusion, I think, about this point. And what prompted me to write the article in Neiman Lab that Matt mentioned in the introduction was the fact that from talking to publishers of all sorts, when we were doing consulting engagements with them or other advisory work with them, it was really clear that very few knew the answer to this question. And even if somebody at their organization knew the answer to this question, the vast majority of people didn't. The newsroom didn't, and many others. So that sort of prompted me to think about digital content through the lens of unit economics. And the idea being that ideally in a business, everybody from executives to the frontline workers producing or selling a product, should have a basic idea of what drives the business. What are the economics that underlie success or failure for that business? And so if you think about a barista at a coffee shop, even if they don't know all the details about it, the exact numbers, they know generally that if they're selling more cups of coffee, that generates more revenue. If they kind of get somebody interested in a more expensive latte or drink or something, that generates more money for the coffee shop. They're wasting ingredients or time or materials, that takes away revenue. And that generally, if customers are happy in buying coffee, they're being a good employee. They kind of know to some degree what success looks like. And that can help them, if they want to be a good employee and get promoted or whatever else, they basically know what they have to do and how the business is going to think about their success in their work. Now, if you compare that to a journalist at a publication, especially when it comes to digital content, there's a lot of confusion about this. Is a successful article one that gets on the front page of the print publication, if there is one, or on the front page of the website or mobile product, if there is one? Is it a matter of page views? If I write an article that gets 1 million page views or 2 million page views? Is that successful? And think about maybe what content I might produce if I saw that as success versus something else. And of course, the actual meaningful metrics that I'll talk about in a minute are often hard to access or hard to understand. And so, there's often a lack of, even when data is available, of people being able to really use it practically. And often there's either too little data available or too much data to make sense of meaningfully. So, looking at that concept, that's what led me to really think about, could you measure this? Could you answer the question of what is the value of a page view and what is the value of an article, and kind of how could you think about that objectively using numbers? So here's a case study that I talked about in the Neiman piece that is just from one publication. This is a newspaper. And the exact numbers will vary publisher to publisher, but the idea is that I don't think many publishers think about their content and the performance of their content in economic terms at all. And so here's just laying out one case study to do that. So in this case, the publisher had, one metric to focus on here is average customer lifetime value, meaning when they generate a new subscriber, on average, if you factor in how long that the average customer remains a subscriber and how many times they renew, how much revenue does that generate for the company? And for them, that number was $345. It's a pretty high price subscription over a few years. That's how you get to that number. And they have very good retention, of course, to achieve that customer lifetime value. When they look at the value of programmatic ads, their revenue per 1,000 page views was $7.16. And I've seen numbers higher than that. I've seen numbers lower than that. Depends on who you talk to. But that's what this publisher measured their RPM at. And some other notes, the average article didn't really get all that many page views, maybe 4,000 on average. Of course, some were very high performing and some were really low performing. So that's an average. And the highest performing article published had 128,000 page views over, I think, I forget what the time frame was actually for this. But so what does that mean? If you take those numbers, it means that one new subscriber, this is the title of the article and of the presentation, for that publisher, one new subscriber, looking just at revenue, is worth about 40,000 new page views. Because you get that just by looking, how many thousands of page views do you need to reach $345 of programmatic ad revenue? Because that's what the value of a new subscriber would be. So, if you think about that, you could start to do some math around, okay, if I have an article that's worth $1 million, that generates 100,000 page views, how many, and I have an article that gets very few page views, but generates a couple of new subscribers, those actually might be equal in value or similar in value. And you can start to think about the relative value in that way. It also means that, one new subscriber, you write an article that generates a new subscription, it creates more revenue than ad revenue from 10 average articles. Again, keeping in mind that many articles perform above the average, but if you were to just say the average, that's what that means. And that ad revenue from the most popular article that they had was the revenue from just a few subscribers, 2.6 in their case. So that's not to say that ad revenue is useless and subscriber revenue is great. It's just because obviously some publishers are making quite a bit of money from digital ad revenue, but it is to say that thinking about the value of content in these terms can be quite useful and can help people understand that there are different ways to provide value with content. And so I'll talk about some benchmarks and metrics around that, but that's the kind of the first thing that drew us to this conversation and to the article that I wrote in Neiman. So, how can you actually, within a newsroom and within an organization, think about how, okay, if I accept that our content that generates subscriptions might be disproportionately valuable relative to content that just drives page views, but maybe doesn't provide a lot of value to users. What would I actually do as a news organization? How might I think about that problem and addressing it? So one, first thing, just to frame all of the rest of the slides here, obviously the concept of a funnel is pretty widespread in marketing and many folks use it. Here's how we think about at Lenfest the funnel for a publisher is, especially for subscription revenue or reader revenue, is going from the reach that you have, users who have experienced your brand in any way, maybe just for one piece of content, to people who are engaged and accessing your content regularly, to people who actually get asked to subscribe. That's what stopped users are. People who then subscribe and then are engaged subscribers is sort of the golden ticket because they're going to stay a subscriber. They're engaged. You can turn that on its side and view it as an individual reader's journey as well. So your job as a journalist is to bring somebody from being aware maybe of your brand to having tried it, experiencing your content, to building a habit around it, to preferring it over other things, meaning they might actually consider paying for it, and eventually being so loyal that they're basically an evangelist and are very unlikely to cancel their subscription. So what all that means basically is that, our view at least is that publishers should really be emphasizing much more than they have engagement as a definition of success for content, because engaged readers become subscribers, and we know subscribers are disproportionately valuable for most publishers compared to just page views, and subscribers happen to generate a disproportionate number of page views anyway. So it's a good, one fell swoop way to drive both ad revenue and subscription revenue. That of course leads to the question of what is engagement? What does that actually mean? How can you measure it? Is it when a user views a certain number of articles in a month, spends a certain amount of time on your site, shares their content, opens your newsletters, tells your friends about you? Well, it's sort of all of those things, but I like to sort of center people around the idea that the ultimate proof of engagement is when somebody is willing to pay for your content. You still may need to do some work to get them to actually do it, but everything you're doing should be about making readers feel your content is valuable enough to pay for it. I'll talk about that more concretely in a second. And that means that your subscription model and your newsroom are aligned. They're both trying to do the same thing, which is get readers really engaged and seeing your content is very, very valuable. This can be good for an organization where maybe if there's some push and pull between editorial and the business side of an organization about what's important, well, everyone can agree that engaging readers and making them feel that the content is valuable is important if you center around that as your goal. So how can you measure this? Here's a benchmark around depth of article consumption per month from a handful of different publishers. So, the charts are a little bit confusing. There's a lot of data on this slide. Basically, what this is looking at is segmenting your audience of people who view just one article or piece of content per month, 2 to 5 per month, or 6+. And maybe you'll adjust those numbers if you're for different kinds of publications where maybe you have fewer articles. If you're a monthly or weekly magazine, for example, I've seen publishers change the thresholds they use for those categories. But the basic idea is that somebody who views, over a certain threshold of content, and we often use more than 5 articles a month, which is that last category, is much more likely to subscribe and stay subscribed than somebody who doesn't. So rather than looking at page views for a piece of content, just to jump ahead a little bit, I'll talk about some ways to measure this, but you're now thinking about content that appeals to people who are coming back to your site over and over again. And how much does your content resonate with those people who are in that third category of really engaged 6+ articles a month? And that might change the way you view the value of your, which content is most valuable. I keep stating it as if it's a fact, and we do have data to support it, that there is a correlation between engagement and other metrics of subscriber growth. This is showing engagement and monthly retention, but the same is true with conversion as well of new subscribers. This is data points from a couple hundred publications, and we did this study a few years ago and found a substantial correlation. So there's some data points that can tell you which content will resonate with your most engaged readers or will resonate with readers who you want to become engaged. And I have some examples on the following slides, but basically the broad categories are which content is contributing to new subscriptions. It does not mean it was the last article somebody viewed before they bought a subscription. I'll talk about that, but it does mean that it helped drive somebody toward a subscription. Which content is being consumed by the different categories of engagement that I just mentioned. So occasional readers, just once, what are they reading versus what are regular readers, 2 to 5 article a month people reading, and what are subscribers reading, etc. And then the last is looking at what's disproportionately, the relative engagement, what's disproportionately popular with those segments, because you may see that if certain content is overperforming with those really engaged readers, then you might want to produce more of that to keep them engaged and convert them. So here's an example of a chart from a publisher that did this. This is something they have in their newsroom available to everybody. It's a little confusing, so let me walk through what it is. Basically, they're ranking articles each week, pieces of content, not just articles, it could be videos, other things, by the percent of subscription contribution. So, what they're basically saying is, of all of the people who converted into a new subscription this week, what percentage of them viewed this piece of content somewhere in their journey before subscribing? So let's say you have a limit of 5 articles a month on your meter. This doesn't have to be the last article you viewed, but if it's one of the 5, then it kind of counts. And so even though the percentages here, the numbers look pretty low, you can see that some content was disproportionately part of people's journey to subscribing, and that tells you something about its value as a piece of content toward converting subscribers. One thing we have found is that the final article you viewed before you subscribe does not tend to be a particularly meaningful metric. It's a little bit random because, at least for a metered model, because it's more a function of when you reached your 5th article a month, that month, or 10th, or whatever the limit is, rather than an indicator that you just found that one article so valuable that you decided to subscribe. And this can be done per article. It can be done per section. If you have different sections of content, if you want to say, opinion content is driving more subscriptions than, something else, or sports content or whatever else. And so it can also be done, for subscribers versus non-subscribers. Which is a good segue. So, if that's too hard to get the data on, which it can be sometimes, to get that granular level of, did this contribute to somebody's subscription? Simpler, it's not perfect, but a simpler thing you can look at is just, content viewed by people who have subscribed and what's disproportionately popular with subscribers. It seems obvious, but it's usually the easiest of these different things that you can actually track. And there's generally, what this chart is showing is that there's generally, it's not perfect, but there's a general correlation, kind of similar path between content viewed by subscribers disproportionately and content that drives new starts. So if nothing else, you can say, I'm going to look at what's popular with subscribers and try to produce more of that, even if it means producing less of something that is less valuable. Getting away from the content itself, one of the really important factors in thinking about engagement is at what point in somebody's interaction with your site, their engagement journey, do you actually stop them and ask them to pay? And the vast majority of publishers for whom we have data here are using some form of metered model where there's X number of articles free, then you have to pay. So this is a benchmark of what we call stop rate. It's basically the percentage of your audience that reaches the limit or threshold where they're asked to pay. That could be because certain articles are just behind a paywall and they click it. It could be because they exhaust their free articles under a metered model. And you can see that the median is actually quite low. A lot of publishers are not asking a substantial percentage of their audience to pay. There's no real good reason for that other than I think a lot of folks being cautious about impinging on ad revenue or any bad PR. And what we've seen again is that almost always the trade-off for lowering a meter limit, stopping a higher number of users, outweighs any decline in page views, which is usually quite a lot smaller than publishers predict. And the reason that it's basically it pays for itself and then some. And so that's because it's driving new subscriptions. Those are disproportionately valuable compared to the ad revenue that could be lost. And also we're talking about 3% of your audience being stopped versus 8%. So even those publishers at the top of this chart of the benchmark are still probably have a lot of room to grow in terms of how many of their users they stop and ask to pay. And just to explain how this chart works, because I have a number of them, on the left is the percentile. So it's basically saying if you're at the 50th percentile, that's the median publisher among the data set. Sort of like if you get your standardized test scores and it says you're in the 95th percentile, it's really looking at the spread of all the data we have and ranking publishers based on that. So the median here is 3.64%. For most publishers that have a metered model, the meter limit now is below 5 articles a month. That's something to keep in mind. There's really only 2 ways to increase the number of users that are stopped, or the percentage of users that get stopped and asked to pay. It's either lower or tighten the access rules, the meter limit, make that 3 articles instead of 5, for example, or it's to increase audience content consumption to a higher level so that people get stopped because they're consuming more content. And there's a bit of a push and pull of when you should do each of those, but those are really the only 2 ways you can increase that metric. If you don't want to lower your meter limit or change that, publishers are looking at other levers where you're not changing it from 5 articles a month, but maybe you're saying it's 5 articles per 45 days instead of per 30 days, or where they're saying if you're in a particular geographic area, you get a different access rule. If you're a publication that's targeted, that focuses on the tech industry, maybe you have different access rules for people in Silicon Valley than you do for people elsewhere, for example. Or where certain content is more restricted, or you target users based on what you think is their propensity to subscribe and give them different access rules. Here's just one example of a publisher. This is the Boston Globe, who was kind enough to share their data with the world about all these different decisions they made about their access rules, from changing their meter limit to that happened around 2014, to expanding to a 45-day window for the free articles you get, to eliminating incognito windows and basically putting a hard paywall on incognito users, and how that affected their subscriber growth over time. And you can basically see that every time they tighten the rules, it boosts subscriber growth just as you would expect. Just a couple more slides and then we'll go to questions. So this is a metric called paid stop conversion rate. This is a good way to measure, are people actually seeing a lot of value in your content when they get stopped? Have you done your job basically in convincing them that this is something worth paying for? And you'll see that the median, again, is around 0.5%. So what this is measuring is the percentage of users stopped in a given month who subscribe that month. And again, the median here is quite poor, but if you're closer to the top of this chart, you're doing that consistently every month, even though the numbers look low, what you'll see is steady subscriber growth every single month, and you'll build a subscription base over time. Some kind of factors that tend to correlate with likely propensity to subscribe. Again, this is taken from newspapers, so one of these you'll see is a little bit specific to that, but it's things you would expect. Reading 5+ articles per month, reading multiple categories of content. A lot of publishers have found that if you just read, one section, you're less likely to subscribe than if you're experimenting with different types of content in that publication. Accessing on multiple devices demonstrates a habit and sort of almost a dependency on your content. If somebody's taking the time to access it, not just when they get to work, but also maybe at home on their phone or during their commute. Local, if it's a local publication, if they live in that area. I assume for B2B would probably be if you're work in that industry. Subscribing to a newsletter or providing an email is one of the highest propensity drivers. Of course, that's a bit of a self-fulfilling prophecy because publishers who have your email address can then market to you and you're more likely to subscribe because of that. And of course, following your brand on social. Here's some pricing data. I don't know how relevant it will be to this group, so I won't spend much time on it, but this is from newspapers. Basically, on the left, you see the range of pricing. The median is about $12 a month for a digital subscription for a newspaper, and that the average has generally increased over time. Even if that specific number doesn't really work for everyone in this group, it is worth noting that in almost every case that I've ever talked to a publisher about this, when they've tested a higher price versus what they initially assumed digital access was worth, the test has proven out that they should raise their price. So it's not to say that there's one right price for digital subscription, but that there is often publishers undervalue what digital access could be worth, and there's often a lot of room for growth in price. And I think this is the last benchmark we have. This is a customer lifetime value benchmark that, again, is based on a lot of newspaper publishers. And this is for digital only, digital subscriptions only. So it's not looking at their print subscriptions. It's not looking at the value generated by advertising revenue by these subscribers. It's really looking at, if I sell a subscription, what is that worth over the lifetime of that subscription for digital access only? So you can see the median is a lot lower than the example I showed earlier, but they were definitely on the high end of what you'd see. But it's also worth noting that this is from such a wide range of different sizes of publishers that for some publishers, even being at the bottom of this chart would be a good number for digital access, and it sort of depends. But either way, this is a number you ought to be thinking about when you're looking at your digital subscriptions. And that is it for the presentation. You can see my contact information there if anybody wants to reach out afterward. And I think we have time for some questions now. I'm looking forward to answering those.
Matt, thanks very much. Folks, if you do have a question, you can go ahead and submit that with the Q&A tab in the toolbar at the bottom of your screen. Matt, we do have a question. Any insights on the type of content that works best in metered approach, blog versus article, or case study versus perspective piece?
So I think in terms of blog versus article, to start with that, it doesn't really matter to most users. I'm not sure most users are even really aware. To them, it's a page with content on it. So that may be a moot point to some degree. I will say that, the content that works best is, for a metered approach, is content where there's sort of something new that's directly valuable to you and your life. Repeat it every time you go back to that publication. If it's a daily, then every day. If it's something else. And so, just for example, like publishers with newspapers with metered models have found that the types of content that really resonate and drive metered users are things as simple as information about the local schools, or development of new business in their area, or information that helps them with their commute. So it tends to be very practical stuff, things that people find useful more so than anything else. And I will say that for a metered model stuff, you don't want, if it's something is really long piece of content, you have to at least factor that into how you think about the meter for that content, because the meter is really tracking the number of distinct pieces of content you consume. So if it's 5,000 word case study and you're counting it equally to a 200 word summary of some news report, you may find that you're kind of not stopping some people who are getting a lot of value.
All right, Matt, we have several other questions. First up, you talked about the $345 customer value, but is that measured in terms of subscriptions or ads or something else, or a combo of all those things?
So that was measured for their digital subscriptions specifically. So what they're really looking at, and I should have explained this better, what they're looking at there is that the value they get from one new digital subscriber just from subscription revenue, not factoring in the fact that that user also will provide some page views and contribute to advertising revenue, is that number is 345. So comparing that to the value of just page views from and ad revenue on page views that an article generates, that's really the comparison that we're doing.
All right, terrific. Matt, we know you're looking at this through the lens of newspapers, but the next question, any insight that you can share on content that is less timely, not necessarily news content, but the kind of long form information that many of our members produce?
So, I think this sort of speaks to really thinking about, for your publication, what is the threshold when you think somebody is engaged enough to subscribe? And that may well come from looking at people who have subscribed and what distinguishes them. So if it's longer form, less timely content, you may not want to look at the total number of articles consumed. You may want to look at time spent, or you may want to say, for each piece of content that's longer form, X amount of it is free, and then you have to sort of, like when you click to read the full report or something, that either triggers a paywall or counts toward a much lower meter limit. But basically, for any type of content, even if it's not, the kind of daily content that a newspaper produces, there's still indicators in a user's behavior that tell you that they're more engaged in it or less engaged in it. And if you don't have those indicators, it may be useful to add them. So, like, for example, if you have longer form content, you may well want to add a break in the content somewhere so you can see not only that somebody loaded the page, but that they got to a certain part and clicked to reveal more, or they scrolled to a certain point, and making sure you have metrics on that can be really useful you might have to kind of use those as a proxy for some of the total number of articles consumed metrics that I was sharing.
All right, very good. Matt, as we discussed, we've got two different audiences here. We've got the specialized information publishers, whose core model has historically been subscriptions. We've also got business media publishers, who traditionally have been controlled circulation, supported by advertising, but increasingly they're starting to look at subscriptions as well. The next question kind of encapsulates that. For many B2B publications, we don't have a pay subscription model. Should we be moving to a subscription model? What lessons are there in reader engagement for a business model that does not get revenue currently from subscriptions?
Yeah, so it's tricky, right? If you're like a controlled circ B2B publication or just you don't have a subscription model. I personally would, if I was any kind of publisher, would be looking at reader revenue as a big opportunity, because if you're providing something, especially in a B2B context, what you're providing is quite valuable to somebody who's consuming it, even if it's a relatively niche audience. And so you very well may be leaving some revenue on the table by not charging for something. You can always dip your toe in the water and do a relatively specific subscription product and see how that works before you go broader. If you don't have a subscription model, there are some other ways to think about engagement. And one is that, maybe you're not sure whether you want a subscription model, but you want to have, you could still look at, you're considering it. First thing you should do is look at your engagement. And if you don't have any users or many users that are reading content consistently, that tells you probably have some work to do editorially before you even think about that. Good news is that engagement also drives page views, so it'll help your bottom line no matter what. The second thought there is just that some publishers have said, well, I'm going to think about a subscription for my publication. What I care about is data about the user, for some sort of lead generation or otherwise, it's helpful for selling at, higher priced, higher yield ads. And so you may say, no, I don't want to charge for access, but I may want to think about what's going to get somebody engaged enough that they're going to give me their data and say what their job title is and their phone number and things like that, which may be quite valuable.
Matt, the next question is kind of a follow-up to that. If an editorial team is considering instituting a subscription model for content that's been free, can the group expect a drop in traffic or engagement in general when the article limit is first implemented?
So one piece of good news about this, at least from the newspaper world, most publishers, what they did when they transitioned from free access, digital access to paid digital access was a metered model. And most of them set the meter limit higher than was really reasonable. But as a result, let's say there's a newspaper where the meter limit really should be 3 to 5 articles per month. But when they started, they didn't want to, the first thing they wanted to do was not risk anything. And so they set their meter limit at 10 or 12 and dropped it slowly and kind of looked at the effect each step of the way. So one good piece of news is you can lose as much or as little, you can put as much or as little of your traffic at risk as you'd like. I will say that I don't think I've really encountered a case where a publisher put a metered model in place and saw substantial impact on page views or engagement in a negative way when they started. It's just usually stopping such a low number of users, and it's only stopping them after they've consumed some content. And so the risk is quite low when you start. Over time, the decision, if you were to tighten your meter limit or your access rules, you will start to have to look at some trade-offs between page views and subscription revenue. But again, most publishers have found the trade-off is a good one to make to some extent. So, but I would just urge anybody doing that to view this not as an either-or decision. Either I have a paywall or I don't, and instead view it as a series of incremental decisions where you mix the amount find the right amount of free versus paid access for your audience.
Very good. Folks, we do have several questions lined up here. If you do have a question, please go ahead and submit it in the Q&A tab at the bottom toolbar of your screen. Matt, next up, we got a great question actually asking you to compare the value of individual subscriptions versus corporate subscriptions. I think that's an interesting question because on the B2B side, we've seen a lot of folks shifting to that corporate subscription where they're kind of pulling together a lot of different things that fall under that subscription, whether that's straight up news content, that could be research, and that could be bundled with data and information services as well. But the question is, how can a metered paywall really migrate from individual interest to a corporate subscription? Is there really a potential for an upsell there?
I mean, absolutely. So the funny thing is that B2C publications are doing this too now. So, if you're the New York Times, why wouldn't you go to big corporations and try to sell them digital subscriptions in bulk for their employees? And so, what you can imagine, especially as a B2B publication, it's completely reasonable when somebody is subscribing as an individual to ask them, what company they work for, things like that. And so, you can imagine once you have a decent number of people, let's say you're a legal publication and you know that X number of people from a particular law firm work for you, you can approach that firm in a B2B context and try to sell them a bulk subscription for their partners or for their employees. That I think is basically the model that one of the models that has worked really well for example, the American Lawyer or law.com.
All right, Matt, next question is asking you to compare churn for digital versus print. And the question is the churn when digital subscription prices rise typically less than the churn for increasing print price? From my newspaper days, I remember 5 to 10% being a common loss when the price increased.
So it is typically less, in part because, you know, this has changed a lot recently, but in print, a lot of renewals are a paper renewal, a check or a phone call even, but they're not, you know, a lot of newspaper subscriptions were not on credit cards with till forbid automatic renewal, and digital subscriptions, that's sort of the expectation. So, you know, depending on what you put in your terms of service when somebody signs up, you can often raise their price and basically make it an opt-out price increase. There's some legalities of how you need to notify them and the like to not run afoul of the law, but you can often say, you know, here's what we're increasing your price to on date X. You let them know in advance, and very many people will just not even look at that, or they'll look at it, and even if they think maybe I should reconsider my subscription, they just will sort of not do that. The other thing you can do, and that I would recommend doing for most publishers, is some form of trial pricing or step-up pricing, where, you know, the price you start somebody at on day one is a lot lower than what you might end up having them pay. And again, you're sort of relying on inertia there, where once somebody's started paying you, they get used to having it, and when the price increase rolls around, they don't even think about canceling it because it's just that useful for them.
Matt, our next question is really asking about whether conversion rates vary depending on what you show them for free. And the question is, does conversion percentage vary much depending on how much of a piece of content you show for free, such as a headline only, headline and lead, or first X number of paragraphs?
So, you know, in general, I will say that the headline and a few paragraphs before asking somebody to pay model in general, like where it's ultimately a hard paywall, has not been as effective as the meter, for at least for newspapers. I can't speak to, you know, beyond that, but we don't have enough data. But in terms of, so the first answer is, like, with the metered model, most of the time when you get stopped, you can't see, you maybe only see the headline, if that, because really what they're telling you is you've reached your limit of free access. If you're doing a model where it's basically a paywall model or a premium, you know, certain content is behind a paywall, I would recommend at least a little bit of the article, call it 2 to 3 paragraphs, unless the content is so short and punchy that reveals basically everything. You kind of have to base it on your content a little bit, but it's helpful, just like the meter is helpful to get people dipping their toe in the water of experiencing your content. Showing a little bit of your content at the point where you're asking people to pay is usually a good idea.
All right, folks, we're getting near the end. So if you do have a question, please go ahead and submit it with the Q&A tab in the bottom toolbar of your screen. Matt, the question is, how can you set up a price for pay-per-view? We are a corporate B2B subscription business, but there is a small volume of demand to pay for a specific report or article. How should I set the price per article?
So we actually don't have any benchmarks on pay per article. I hope we have some soon. And that's because in the consumer content business, micropayment models have just basically failed miserably every time anybody's tried them. I imagine in the B2B world, they will work quite well if it's the right content. And I would basically, my recommendation for that would be, you know, if you're not able to sell it at a pretty high value, like as a sort of specialized report, you know, for anything from, you know, maybe like over $100 or something like that, where a small number of sales will drive enough revenue for it to be meaningful, then I would recommend, if instead it's something that is like much, you know, kind of smaller and it wouldn't be worth that, I wouldn't try to sell one piece of content for $10 a view or something like that. Instead, I would say, create a premium subscription for all the content like that and make it $10 a month. One model to look at for that is, that's a company that's done that very well, is Business Insider, their BI Prime product, which I actually worked with them on before they launched it. And you know, they're a consumer publication primarily. They're a huge kind of page view chasing company, but their subscription product often is these reports that are really niche and specific to a particular industry. And what they found was that you know, they can sell those to like maybe 100 people who want it, but they can, you know, those people will definitely subscribe to get those kinds of reports. It'll be like an executive, changing executives at some company in their industry, or some more insidery type of stuff. And so in their case, they didn't try to charge per article for that. They made it a subscription for all such content, and they put that behind a hard paywall. And that's another way to go about it. But if you're selling individually, it's often just not worth the effort of marketing it and charging for it to do it on a per article basis, unless it's a pretty high price.
All right. Matt, one thing that I found especially useful in the article that you wrote for Neiman Lab last fall was you gave 4 bullets for takeaways on how newsrooms, content teams can really get unit economics to be part of their daily workflow and how they're thinking. And I think to close us out, I'm hoping you can just summarize those quickly for us. I'm talking about things like socialize key unit economics metrics.
Yeah,
and
absolutely.
Go ahead.
Yeah, so I wrote that a while ago, but I still think remember them. So you know, the first is making sure that these things so one thing that often happens in newsrooms or in news organizations is that even once the marketing or business side of the company starts to think about metrics like this, like the unit economics, and start to have really good understanding of the value of their content and what's driving their business, that never transitions over to the folks who are producing content. And so, you know, in the newspaper world, what that meant was, you know, when businesses were really trying to grow digital audience as their primary goal, reporters saw being on the front page of the print edition as success. And when they started chasing subscriptions, reporters saw page views as success because they were like kind of fighting the last war. And so socializing those metrics internally is really important. You can do that by sharing reports of them every day with the newsroom, or just putting it on a big board in the newsroom, or whatever method makes that kind of part of the experience and part of the focus of the organization. So the second one I think was around reporting, just making sure that people at every part of the company have access to really simple, easy to understand reports that share the key metrics that are driving this, whether it's new subscription starts, but also all of the stuff I talked about around which content is performing to help drive a subscription goal or whatever your financial goal is. And reporting on which content, if you have subscribers, which content they're consuming, meaning, you know, if XYZ article was really popular with subscribers, much more so than it was with non-subscribers, that's important to know, and that can be something that a content producer sees as a sign of success for them. And then the last is if you can do it, that kind of subscription influence chart that I showed earlier, which ranks articles by, you know, how, what percentage of new subscriber starts involved the user seeing that article. That can be another way to sort of embed the idea of subscriptions or driving revenue equals success for your content into the fabric of how your newsroom works.
All right, terrific. Well, with that, folks, we are out of time. Matt, terrific job. This is a great Q&A. Folks, if you have additional questions for Matt, he's got his contact information up on his last slide, and if he's comfortable with it, we'll also distribute that after this session is over.
Sure, yeah, feel free. And thank you, everybody. Great questions and a great conversation.
All right, terrific. Well, folks, thanks for joining us today from SIFA, from Connective, from our sister association at Association Media and Publishing. Glad to have you here today. This session has been recorded, and I will follow up shortly with a replay. And with that, The webinar is over. Have a good day.
Thanks, everybody.